Hello everyone. We had Budget 2025. Budget 2025 gave surprises beyond imagination. For the middle class persons who are complaining about tax burden not increasing much of a salary and other kind of problems, this budget gave them the happy moments. In this noise of happy moments, people forgot to look into deeper aspects of this budget, how this is going to help the economy, the markets. In this episode, I'm going to talk to one of the very important guest speaker today, Mr. Ashish P. Somaya, Executive Director and CEO of White Oak Capital and Management, to know more about how this budget has fared with respect to how the markets are going to behave, how it is going to benefit the economy. Please stay till the end of the video. Mr. Ashish Somaya is going to bring to you the finer points about the budget, which probably would have missed your notice. This is NRI Money Clinic for you, and I am Dr. Chandrakant, but your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about the budget and the finer aspects of it and how it's going to help you, the investor as well as the economy, we have very eminent personality, Mr. Ashish P. Somaya, Executive Director and CEO of White Oak Capital Management. Welcome to this episode, Mr. Ashish Somaya.
Thank you, Dr. Bird. Thank you for inviting me.
Mr. Ashish Somaya, yesterday it was a surprise for everyone. In the last budget of July, everybody was so much scared, and Mrs. Nirmala Sitharaman was at the receiving end. Today, the story has completely changed, and everybody looks to be very happy. We'll discuss that a little bit later, but let's move more to what we have not heard in the marketplace. First thing is, everybody likes reforms when it comes to question of economy, markets. What are the major reforms the government is moving as per this budget?
Sure. So, Dr. Bird, actually what happens is that most of us, when the budget is going on, most of us actually, I'm not saying everybody, and I don't mean our investors. I'm talking about market participants, people like us who are sitting in the office where there are trading screens, and when there is stock market and there is, business TV going on. What happens is that most of us, when we are watching the budget, we are also watching the stock market, correct? And I think yesterday my learning was that when you're watching the budget, you should not be watching the stock market. Because, if you read the economic survey which comes before the budget, the economic survey was clearly saying that, we are on the right path, but what we need is a bit more relaxation in terms of regulation and, more on ease of doing business. And we need those kind of reforms. Generally, what people understand of reforms is that the government will make big plans about, investing few lakh crores there, changing some tax structures, announcing big bang production linked incentives. So that is what people understand out of reforms. And that is what even the stock market thinks in terms of reforms. But the economic survey gave a kind of a hint that, the kind of reform that we are looking at is more, like deregulation, more of doing business easily. So let's take an example. Yesterday in the budget, it was announced that, the government will form a high-powered committee, which this committee will look at all the non-financial sectors, all non-financial sectors of the economy, the committee will look at, and it will come up with suggestions, or it will come up with change to the regulations, whereby, all types of permits, licenses, all types of regulatory reportings. You must have heard it many times, right? That if you're running a factory in India, how many types of permits, licenses, and how many regulatory filings to different municipal, state government and central government agencies that you need to do. So the government at a central level is forming a high-powered committee to remove as many of these hurdles as possible. And they have said that the states also would participate in this. Plus, they would publish some kind of competitiveness index of different states in terms of how simple the regulations are and, how they have functioned on this. So that's an example. Then say, decriminalizing a lot of, areas. Like say in India, like what is civil and what is criminal. Like lot of seemingly civil laws also have kind of, criminal penalties, where somebody can be jailed. So, arrest and, these kind of things. So decriminalizing a lot of laws. So, beyond just looking at the budget, then I'll give you an example. Tourism. Now it is well known that other than real estate, the second thing which really creates a lot of jobs is tourism. Now, if you see in India, 143 airports are functional. And they are saying that including helipads and airports, they want to add another, I'm missing the number, but maybe some 100 more. I can give you a practical example. I'm born and brought up and lived in Mumbai in India all my life, nearing 50 now, correct? Can you imagine? I have gone to Banaras 3 times in the last 5 years. From Mumbai to Banaras, if you see 10 years back or 5 years back or 15 years back, you would be hard put to find a way to reach Banaras. Now, say for example, there is a Mahakumbh. In my entire life, I have never gone there. I am going there next week. And Mumbai to Prayagraj is a direct flight. The other day, I was in Kolhapur for work. How do businesses like ours open offices and do business in a place like Kolhapur or Ichalkaranji if there is no airport, for example? If the sales head or the CEO just can't reach a place, if it's going to take me 2 days to go and come back, I don't think I'll be able to do business there. Right? So these are the kind of things. Like I was in Kolhapur airport between 2 o'clock to 4 o'clock in the afternoon. If you're sitting on Kolhapur airport, you will find it looking like a ST stand, literally, right? Flights to everywhere. The flight which I took from Kolhapur to Mumbai was a Brazilian aircraft flown by a Brazilian pilot. And whatever he spoke, nobody understood. In the end, he said, Namaskar. So what I'm saying is this Udan scheme, for example, they're expanding. Tourism, for example, they are giving multiple incentives. They said that they will even give finance for something like homestays, not just 5-star hotels. So I think that beyond just what the stock market wants to hear, there is many things which are there in the budget, which is about ease of doing business, which is about simplification of laws, which is about promoting sectors beyond just what the stock market is observing, like, Udan scheme or tourism. All of these things are important. Last thing I'll tell you why I said, is that we should look just beyond the budget. We'll come to more details of the budget, but just beyond the budget, look at it this way, that in the background, they already announced 8th pay commission. Right? In 2008, there was 6th pay commission. 2016, it was 7th pay commission. 2025, it will come in 2026, but it will come with arrears. Now, in this 8th pay commission, the entire base, the salary bill, the compensation of central government and PSU employees, it just goes by percentage points, like it goes up by a mile. So there are many things which are having economic impact, which are there in the budget and which are there outside the budget also. And this government is, not just about the budget. All their production-linked incentive, corporate tax cuts, multiple things they announced outside the budget. Now, if our Prime Minister is going to US to discuss a trade agreement with US, see, the world is moving from being multilateral to bilateral, right? We have trade agreements with Europe, with UK, with UAE, right? Multiple countries. So that is happening outside the budget. I mean, all industrial policy cannot be announced in the budget because you are signing up multiple free trade agreements. The way the world work has also changed. So I think there are many things in the budget. I actually didn't find anything negative in the budget. That's why I said, if you watch the stock market, you will feel that something wrong has happened. But actually in the budget, there is nothing negative. And given the circumstances, there are many things they have done which are of far-reaching consequences.
One thing, what we have observed over the years is, earlier, during the old Zamana, we used to see budget as where they are increasing the tax rate, where they are going to reduce the tax rate with respect to the services and manufactured goods and other things. That's a thing of the past now with the GST Council coming into picture and one single tax has come in. But this particular budget looks to be a paradigm shift from income tax based economy to a consumption tax based economy. Now the government has given 12 lakh up to 12 lakh rupees, a complete exemption of income tax. It's just not a mere 5 lakh increase from where it was earlier, but it has many ramifications. For example, now I saw on the WhatsApp, I don't know how much it is true, but I have every reason to believe it is true. Over 85% of the taxpayers, which are at the bottom of the pyramids, don't have to file tax returns itself, which means there is not much of a burden of compliance requirement for these people, or even for government. They can focus their energies on other taxpayers, which are the high taxpayers. Two, for most families, let's say that if somebody is husband and wife and they are earning 12 lakh each, at a family level, you have got roughly 24 to 25 lakh rupees to spend this money. And no family today can ever complain telling that I don't have the money to spend. The basic requirement, wherever that unsaturation is there in the families, they can spend that money. Look at the retirees people, even if they have got 3 crore, 6 crore, they keep money in the bank FD or in the debt funds or wherever it is. If they manage things in a beautiful way, they are out of the tax network. And it appears like a complete paradigm shift. So the government is foregoing certain taxes for that, but probably it is assuming that this income tax is compensated by the additional GST recoveries that they might make. What do you feel about this paradigm shift? How this might impact the markets going forward?
See, I think, what is happening is that in India, given that, while it is not straight away articulated that way, but, I should compliment you because what you said is very insightful in the sense that, consumption is actually going up. We are talking about the demography is in such a way that in the coming years, maximum number of people in India will be, between 20 years to 60 years of age. So, of course, they will earn more, but at the same time, consumption also is actually going to rise significantly. So clearly, if you realize that how much is the direct tax collection versus how much is the GST, I think now GST is reaching literally 2 lakh crores. If I'm not wrong, January number, it was some 1,96,000 or, nearly 2 lakh crore kind of a number. Second thing is that, I think over a period of time, what happens is that the amount of tax that they collect, see, like you said, they have 85% of the people are out. But the reality is that Madam announced that it is only 1 lakh crore. Now that 1 lakh, see, government's revenues are in, 35, 40 lakh crores, correct, total revenue. Nearly 30 lakh crores total revenue. Now in that, you are giving up 1 lakh crore, but you are spreading cheer and you are, giving a concession to a very, very large base of people. Secondly, like you rightly pointed out, the multiplier, meaning if you forego 1 lakh crore worth of revenue in terms of tax collection, what it adds to the GDP is not 1 lakh crore. Certainly, it is a much bigger number, right? There are economic multipliers to it, right? That 1 lakh crore of spending is not 1 lakh crore added to GDP. 1 lakh crore of spending added is multiple times in terms of the actual GDP accretion, and hence it will also result in that much more indirect tax collection. So, I think there is this whole thought process that if all of these people, running into crores of people, because I think there are some 7.6 crore people who are currently in the, filing taxes. And like you rightly pointed out, nearly 6.5 crore are out because of this 12 lakh rupee regulation. Only 1 crore people will end up paying taxes. So, but these 1 crore people are going to contribute bulk of the taxes. And by letting 6.5 crore out, you are actually ensuring consumption also fires up. Indirect taxes anyway will get collected. And the last thing is that, it's always easier to collect taxes on expenditure rather than trying to collect on income. So maybe there is some of the, maybe not directly stated, but, unstated or implicitly, there is that kind of logic behind it, quite sure.
I was going through the fine print of the budget. What really surprised me was when it comes to question of subsidies, the amount of subsidies have been maintained at the same level or it has come down, and that too in tricky places like fertilizer subsidy, food subsidy, Manrega and other things. But I was very surprised. There's not much of a noise from the political parties. Is it a step in the direction, or will there be a political turmoil when people dig more into it? On the contrary, the capex has gone up, which is a productive asset compared to a non-productive subsidies. How do you have interpreted this reduction or status quo? Even a maintenance of a status quo is a reduction of a subsidy. So how do you interpret this?
But so see, actually what is happening is that, ultimately fertilizer subsidy and all these kinds of things, maybe it is helping some of the landowners or the big farmers. Definitely it helps small farmers also, but it is like a disproportionate thing, in terms of the big landowners or the big guys. Second important thing to keep in mind is that the government, even outside the budget, and even in BJP ruled states, correct, you've clearly seen that the focus is not just on direct benefit transfers. The focus is on direct income transfer in all of these state election, what they're talking, correct? Whether it is Haryana, whether it is Jharkhand, whether it is Maharashtra, Andhra Pradesh, Telangana, in all of these states, 2,000-3,000 rupees, 5,000 rupees per month. The weaker sections of society and more importantly, women, they are directly, so, the government is working in various ways. And instead of giving all these indirect things where there will be leakage or it might land up in the wrong hands, it's much better that directly give money to the intended beneficiaries, right? Somewhere they are giving for girls' education, somewhere they are giving it for medicines, somewhere they are giving it to women for monthly expenditure. So multiple things. So I think the kind of spending, see, one is efficiency has gone up, and second is the direction of the spending. Previously, efficiency was also poor, and a lot of, when you give all these subsidies, it is misdirected spending. Here, what they're doing, they're increasing the efficiency and they are making it well directed or well targeted to the intended beneficiaries. I think that is why there is no noise or hue and cry about it really. And efficiency has gone up. See, I'll give you one simple example over the number of years which all our listeners may have noticed. See, whenever we have discussed economics or whenever we have discussed budgets in the past, I'm sure you will recall that in the past, the largest criticism of governments, whichever government, not any political party I'm talking about, whichever government in the past, there has been criticism that these governments, they spend a lot on maintaining bureaucracy, on subsidies, on revenue expenditure and wasteful operating expenditure they are spending, all what they call non-plan expenditure. So it used to always be said that the government is profligate. They are not doing enough capex. They are not doing enough fruitful, well-directed spending. They are doing maximum amount of non-plan spending. So all the money going to revenue expenditure, not enough being done for infrastructure and capex. That used to be the criticism in the past. Today, if you see, in last 3-4 years, the criticism for the government was that consumption is suffering. You're not doing enough. You're focused only on capex. You're only talking about roads and railways and infrastructure and ports. Now see how much distance we have traveled. In the past, the complaint was that there is only non-plan expenditure, only revenue expenditure, not enough capex. Today, the criticism is that weaker sections of society and taxpayers and middle class is suffering, whereas government is, putting 11 lakh crores on capex and all. And today, the market, they said they will spend 11.2 lakh crores on capex. Instead of that, they spent 10.2 lakh crores. And they said, okay, next year we'll make sure we spend 11.2 lakh crores. These are not small numbers. 11 lakh crores being spent. I mean, there has to be absorption also, right? I mean, just because you want to write a check of 1 lakh crore a month doesn't mean that the economy and all the projects will absorb all that 1 lakh crore a month. So that is it's really high amount of spending. So today we come to a situation where we are saying that 11 lakh crore of capex, that also we are complaining. In the past, we were complaining about non-plan expenditure. Now we are saying, Arey Baba, you are doing only plan expenditure. You need to give money in the hands of people. So much of things have changed. Actually, the way the government functions, the quality of work which is happening, it is still not where it should be, but definitely it has transformed quite dramatically in the last few years.
Now, with this new money which is left in the hands of the general public, and with the new measures which have been announced in the budget, which sectors are likely to benefit and where the focus is going to be like, and the investors, what is that they should keep in mind when they invest money today? Which sectors are likely to get benefit out of all this?
So, see, 2-3 things. One is that we ourselves are not actually, if you see us as a portfolio manager, we are not a sectoral investor. What will happen is that we will run a portfolio which is benchmarked to BSE 500 index because our dharma is to beat BSE 500 index. And BSE 500 index will have everything in it. So our main focus is always that, okay, we are bottom-up investor. But like you rightly pointed out, if the budget is going to redirect the spending, or if the budget is going to redirect the flow of money into a certain direction, then even in the bottom-up analysis or the corporate projections, it will show up. So in our portfolios, it will only show up as overweight or underweight, or higher weightage is going to certain sectors and lower weightage is going to certain other sectors. I think that is the only difference which will come up. Second important thing is that whatever I'm telling you is not just driven by the budget. Like I said, there is a 8th pay commission, for example. I think that is going to have a bigger impact or as big an impact as the budget itself, but it will get announced maybe a year later. So all of these things put together on your question, I think, see, even before the budget, sir, market was already changing its color. 2022, 23, 24 first half, 2.5 years or nearly 3 years. In the market, we have seen everything which is government policy driven, macro driven. What I mean is PSUs, railway, infrastructure, energy, utilities, defense, manufacturing, everything which is driven by government policy, public policy, everything which is driven by macro fundamentals like geopolitics, commodity prices. Those things did very, very well for almost 3 years. But if you see from June onwards, and more so September onwards when the market started falling, these sectors are the ones which are falling the most. And even before we reach the budget, you could clearly see that, financials, private sector banks are outperforming, IT and digital and pharma and, consumers, some selectively consumer stocks were outperforming. So budget is only giving an impetus further to the changes which were already underway in the market. Because in the market, see, yesterday, for example, why was the market disappointed? Market wants to hear, see, everybody's folio in everybody's folio, all this cyclical, PSU, defense, railway, infrastructure, energy, utility, these things are overweight in everybody's portfolio. Those are the things which have given some pain in the last 3 months. So when the budget comes, you are expecting, you want to see what is in your portfolio. When the budget comes, most people are expecting government will announce further capex. They will say, how come this less capex will be increased? This is what they want to hear because that is there in their folio. When the budget day starts, nobody expects Zomato and Swiggy to be the top gainer at the end of the day, right? Nobody expects FMCG companies to be the top gainer at the end of the day. So what has happened is that even before we reach the budget, some of these cyclical and policy-driven sectors, they had already peaked out and they had started to decline. And we were already seeing market rotating in favor of IT companies, private sector banks and consumer companies and healthcare and maybe even say chemicals and some of those kinds of things. So I think that rotation is underway. The budget has only accentuated it. In our portfolio, it will not be drastic changes. It will just be you will see some rebalance. Yeah, sorry.
I still remember talking to you on earlier occasions where you had mentioned about these contra calls, the underperforming sector, and how people have to constantly keep rotating and look for those opportunities than in the places where they have given returns in the recent past. So now we are seeing whatever you said is happening now. One thing that interested me was to know from you what changes have come in from IFSC, the Gift City. We are covering Gift City very extensively this year, and there is a huge interest from the NRI community to invest through the Gift City. So what are the material changes or what are the incentives or what changes have come in the way the IFSC is going to function from here onwards?
See, I think, they are only expanding the scope of operations in IFSC. Of course, your and my work is more related to, NRIs and foreigners investing into India. But on the other hand, if you actually see, say for aircraft leasing, for shipping, so a lot of these other truly global kind of businesses, so typically what happens is that IFSC is obviously in India, but it's our offshore center. It's equivalent of your DIFC, for example. Now, what happens is that when anything hits Indian shores, when anything hits India's, geography or legal territory, then all the complications starts, whether it is customs duty, whether it is income tax, whether it is excise, multiple things. The beauty of this offshore center, obviously, is that while you are doing business with India, technically you're not on Indian shores because it's an offshore center. So consistently, like if you see financials, like, our investments, like we have a fund for foreigners and NRIs specifically to invest into India. Now look at it this way. When NRIs invest into India, they are dealing with the Indian banking system. They are dealing in rupees. They are, every time you redeem, there is a TDS for the capital gains tax. Then you'll have to file your returns. You need PAN. So many complications for investing. But instead of that, if you see, if NRIs are investing to Gift City, the beauty is, first of all, that there is no tax at the fund level. Meaning that what you would have otherwise onshore paid a tax on redemption, if the same money is invested through our Gift City fund, there is no tax on redemption. Correct? And I believe that a lot of the countries like UAE, Singapore, etc., they anyway don't have capital gains. Which means that in India, in Gift City, there is no tax. And when you repatriate the money, again, there is no tax. The government is making it more and more attractive for any kind of business to be done through Gift City, and not only making it attractive, they're giving more tax incentives. So I think that, Gift City is going to become very, very big. May not be initially for all the global investors, but definitely very big for the Indian diaspora because they understand this jurisdiction much better. And they are the ones who are being incentivized by waiving of taxes, for this investment. So I think the most efficient way of investing for NRIs to invest in India, by far now the most efficient way is to do it through, any Gift City fund, rather than doing it through your NRE bank account.
When I was going through the budget proposals, one thing which was of a little bit of a concern was the fiscal deficit. It was at 4.8. Yes, we passed through a pandemic year and a lot of spending has to happen. And it was said that it is going to drop over the years. But still 4.4% for the next year still looks very high. In between that, you have 1 lakh crore of direct tax exemptions which have been given. Government is telling that they are going to borrow 15 lakh odd crore rupees, which is literally about 2 lakh crores higher than this year's number. How this is likely to affect the bond yields, the inflation, and the interest rate going forward? Will it have material impact on any of these parameters?
See, I think a couple of things. I think the net borrowing is a bit lower, right? Maybe about 11-12 lakh crore kind of net borrowing was announced. because there'll be some maturities and multiple other things to keep in mind. The second important thing is that if you see, we are on a fiscal glide path. Like say this year, FY25, we are going to end the fiscal deficit a tad lower than what was originally projected. And even for FY26, it was expected to be 4.5, which they've announced now as 4.4. So my sense is that this government overall track record, barring COVID, which was, nobody was tracking deficit that time because COVID, everybody was sailing in the same boat. But after that, I think they've again come back on the glide path. So we've not seen any major disruption in bond yields. If you see the market as an indicator out there, no major disruption in the bond yield, really speaking. And I think, inflation also, if you take economic survey, if you take RBI projections, inflation is actually set to, kind of come under control. Core inflation is already coming down or coming under control. Intermittently, it is the food inflation which has been playing truant. So given that inflation is in control, given that we are sticking to the glide path, we've not seen any escalation on bond yields. In fact, now if you see at 6.69, 6.7% kind of bond yields, we are pretty much close to our lows in recent times.
Now, in the recent past, all the events which we anticipated, Trump's election, Trump trade, the tariffs, all that ifs are behind us. Budget is behind us now. Markets have decently corrected. They have spent time. The FII outflows, whatever that has to happen, has happened. With all these events behind this, do you think markets have stabilized here? How do you expect markets to perform in the next couple of quarters? Of course, nobody can predict, but the guesstimates, what do you think, how markets are likely to perform?
See, I think that, originally our problems didn't start with India's numbers or India's corporate earnings or anything to do with local. Like our market kind of peaked in, I remember 28th of September 2024, Nifty hit 26,200. If you recall, at that time, rupee was 83.5 and the dollar index was 100. After that is when, this Trump trade started, because that's when the, US, the news started coming that Mr. Trump is ahead of Ms. Kamala Harris and, he's likely to win multiple states and, swing state surveys and those kinds of things started to come. So that's when the Trump trade started. Right-wing, business-friendly president coming in, market kind of rallied. And, even some of the global investors, they may have said that, okay, temporarily, let's reduce emerging market exposure and let's head back to US. Now, that has caused not only US markets to rally, plus, US markets have been on a tear purely related to all this, AI related. Since the time ChatGPT, OpenAI came, there has been a AI-driven rally, so to speak. So my sense is that because of this rally and, the dollar appreciating and US yields also going up, as a result of this, all emerging market currencies started seeing depreciation and all emerging markets are seeing outflow of FI and all emerging markets are underperforming the US market. So India is actually a relative outperformer, whether you see currency or markets. We have been a relative outperformer in the last year or so, but we are with the other emerging markets. Now, on your question, I think budget has been good. Mr. Trump's policies, we need to just see how it plays out. So I think next month or two, we have to see RBI policy, we have to see US monetary policy pronouncements, and we have to see the first 3 months of Mr. Trump in terms of how things play out, correct? Now, Mr. Modi is supposed to be in US in first 15 days of February sometime. He's supposed to be in US. And that will also tell you, because he has started imposing certain tariffs. According to me, tariffs are just for negotiation. And Mr. Modi is also supposed to be, obviously, so India is in the back channel negotiating. You read the news that, they're negotiating some trade agreements with the US, correct? So I think we will get we will get leads from these things in the next couple of months. My personal opinion is two things. I think that somewhere the US market has really run up a lot. The broad market is underperforming and those 7-8 stocks have been driving the market for far too long. My personal opinion is that all this chasing of US stocks, somewhere in this year it will stop and the market in US will actually correct. And I think that will be, if US market corrects, temporarily we will face some headwind, but ultimately we will outperform because, US market correction will be accompanied by dollar depreciation. If the dollar lets up its strength, emerging market currencies and emerging markets will be back into play. So I think all of this, we just, we are in a transition, maybe a couple of months. But as far as India's market is concerned, I would dare say that the worst is behind us. We just have to wait for some of these developments and we'll be out of the woods.
Last question to you, sir. Government has left a lot of money in the hands of investing public or the general public. Your sane advice for these people. All this extra money in your hand, use it for consumption, whatever you like, or make best use of this money, save certain amount of money and create wealth and get best out of both worlds. Spend the money, save money and grow your wealth. What's your advice for my audience?
Yeah, no, see, I have no doubt. I think what you said, I will completely agree with that. Because, ultimately it's an economy. Your spending is somebody's revenue or your spending is somebody's earning. So ultimately, whether it is the government or all of us market participants, we, like I said right at the onset, that 1 lakh crore, we expect that in terms of multiplicative terms, it should add a lot more to the GDP. So definitely that is bound to happen. The second thing is obviously, I think, saving has to go up. Because, when saving goes up is when ultimately investing will also go up more in the core economy or the private sector capex and those kinds of things. So I hope that, this entire thing that the government has done, and you see, it's not 1 lakh crore for this year. It's obviously it is that much, every year going into the future. Also, we should not forget that all these kinds of things, they result in a bit more formalization of the economy because, people who have been concealing incomes. See, if somebody is deliberately reporting 5 lakhs of income, they're likely to now report 10, 11 lakhs of income, right? So, informal economy, concealing of incomes, more money coming into formal channels, declaring more income. I think there are multiple benefits to all of this. So let's hope that, saving goes up, spending goes up, all of these things directly contribute to the GDP. And a little bit more on the formalization also should happen because large number of people will be encouraged to report more income.
So thank you very much, sir, for all these inputs, and it helped us to understand more about the budget than we listening from the television channels and the newspaper. We remain in gratitude to you for your kindness to spare time for briefing. Thank you very much.
Thank you. Thank you. Have a good day. Thank you very much. Thank you.
Dear viewers, hope the interactions we have had today with Mr. Ashish Somaya helped you to understand fine prints of Budget 2025 and would have guided you on how you should set up your investment exercise in the months ahead. If it did help you, please do give me a thumbs up. If you are somebody who is yet to subscribe for this channel, please hit that subscribe button and press the bell icon. Do not forget to share these videos with your near and dear ones, friends and relatives, and on all the social media on which you're connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another expert on yet another topic next Tuesday. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.